Welcome back. I'm Pratap here. Today is the 29th December 2024. In this video, let us analyze the Bitcoin, and also please look into this disclaimer. I'm not a SEBI registered analyst. Whatever the analysis I'm doing, this is only for educational purpose, and for planning any of your financial related activities, you must take assistance from your financial advisor. And this is whatever the analysis I am doing, it is only for educational purpose. And also please understand, I am providing complete free training on supply demand zone price action. And the cost of the training is over 8,000 US dollars. And it is a complete free training. All the training lessons you can access from our NeoStock YouTube channel. At our channel homepage, please click on the tab posts. Some of you might be seeing the tab community. Click on the tab. You get access to this post having our free training course. And this post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist supply demand zone price action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So please join at our Telegram channel. It will be helpful to you. Now let's get into the analysis of Bitcoin. Let us do top-down analysis starting from monthly time frame. So this is a Bitcoin monthly chart. Here you have a monthly demand zone, drop, 6 base candles and a rally candle. Let me draw the monthly zone. So monthly demand zone. So interesting observations. This monthly demand zone is having monthly EMA confluence. And currently prices are also overextended from the monthly EMA 20. Price overextension you are seeing. What did you learn in price overextended training lesson video? When there is a price overextended away from the EMA, they tend to retrace up to the EMA value. This is at the monthly chart. To retrace to the monthly EMA, it takes several months' time. But before that, you may see support from weekly zones or daily zones. Again, they will push the market up. But at some point of time, prices will reach, but it may take a long period. Sometime, if this is the time to retrace, maybe you may see the retracement in next 1.5 month period, it may complete. Anything will happen. So that's why always we should focus on the trends, and also we should focus on the price direction at different time frames. Okay, now prices at some point of time, prices reached up to here. See the high of this candle. After that, they were retracing back and reached up to here. Okay, these are the few important observations you have to identify from the monthly time frame. And also you should also observe there is no monthly supply zone. So that means this demand zone, monthly demand zone, is a all-time high monthly demand zone. Okay, now what is the price action at weekly charts? So let me go to the weekly time frame. So at the weekly time frame, you have a rally, 2 base candles and a rally. Rally, base, rally. Let me draw the zone. This is the weekly demand zone. But EMA is away from this zone. let me draw the EMA at horizontal line. So here at present you have EMA here. Over a few weeks these values may change, but the time being this is the current EMA. This is weekly EMA 20. I also added a label, weekly EMA 20. Just for easy remembering purpose, I have drawn this line. So that in any, suppose if the daily time frame in this area, any daily zone are 4 hours, because this is a 24 hours market. After daily, the next time frame is 4 hours. 6 candles are there. 6 4 hours candles to meet the daily time frame. Generally, we keep 3 to 5 candles is the ideal scenario. I also told you at special scenarios, even up to 6 candles also we can allow. This is a 24 hours market. Generally, we use 6 candles for the time frame below 24. The time frame below the daily time frame, the 4 hours. That we will see. Maybe this is the area. Maybe we might be having a daily zone or a 4 hour zone. Anything is there. Probably next time it may get some support to plan the long trades. But definitely this is the weekly time frame. It takes some time to reach up to this level. Meanwhile, do we have any weekly supply zone? No, we don't have any clarity about the weekly supply zone. But interesting point you have to observe here. I don't know how many of you observed this particular point. I am going to explain. Have you noticed some rejections are taking place? Prices are coming this area and sharply moving up. Again moving up. Again moving up. Again moving up. Probably in the time frame, lower time frames, maybe a daily time frame or 4 hours time frame, you may see a high liquidity zone in this area because it is holding the weekly candles. See, prices are at this area, they are coming and prices are moving up and again coming to this area, again moving up, again coming to this area, again moving up, again coming to this area. That means there is a strong high liquidity zone in this area that is strongly holding the prices. See how the rejections at the weekly time frame is helping us to predict what could be the scenario in the lower time frames. That's why when you are going to the lower time frames, you should focus on this area. This is a very interesting observation. And meanwhile, this base rally is also a all-time high weekly demand zone. And this weekly demand zone is having zone confluence with monthly demand zone. All these concepts you have learned in your training course. What about overextension? At some point of time, prices are overextended from the weekly EMA 20. Now prices are coming down and further it come down up to here, the overextension may complete. But meanwhile, this high liquidity zone at lower time frame should be violated. Because currently that is having a very strong institutional order flow. Probably that is the area we should focus to get some short-term returns before that zone is violated. Okay, now let's move on to the next time frame, daily. So now we are at the daily time frame. So this is the weekly EMA. In this area we don't have any daily zone here. Probably further lower time frames you may see a zone here. But here you have a rally, base, rally. But here have you noticed drop, base, rally. We are at the daily time frame. This is the daily zone. For easy remembering purpose, probably let me add some text. This is a daily HLQ demand zone, high liquidity demand zone. Why? Because this is the area we are keep on getting multiple tests, several tests. Definitely this could be a high liquidity zone. So far already it is tested 3 times from this zone. When this is type 2 proximal point of view, generally we draw up to type 1. See, now several tests. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 candles tested this zone. But anyway, I am drawing up to type 2 proximal point of view. So we have a daily demand zone. What about daily supply zones? Yes, we have daily supply zones here, rally base drop. Or if you consider this is a big candle, you can also draw a zone like this. This is the ERC candle, failed ERC as a leg-in, and then you have a base and drop candle. That way also you can consider, nothing wrong. Or if you are convinced this is also a base candle, you can draw a zone like this. But first let me change the color to daily supply zone. So either way it is valid. Okay, rally base drop, and after that you are again seeing another rally base drop here. Let me draw one more supply zone. And this supply zone is having daily EMA confluence, this daily supply zone. And what is the current trend of the daily zone? That is very important. See here you have a drop base rally. This drop base rally has been violated. This zone is violated. That means the trend is sideways. You may say this is also looking rally based, but this could be a medium size candle, leg candle. That's why we are not considering this as a zone, but this is a valid zone. But what about here, drop base rally? This is also not convincing large candle, not that way. But this is again LOTL zone. In case if you consider this as a leg out, this is LOTL, drop base rally. Until this zone is high liquidity zone is violated, you cannot change the trend. That is what we discussed in LOTL scenarios. When LOTL scenarios, when two zones are overlapped, both zones should be violated. Then only trend change will take place. Please listen to your LOTL session, maybe lesson 8 or lesson 9. Not 9, 9 is practicals. Maybe lesson 7 or lesson 8. One of these lessons I explained about LOTL. Please correct me if I am wrong. Okay, current daily trend is sideways. So everybody should agree. In sideways trend, we get opportunities on either side. You get a short opportunity and also you get a long opportunity from these zones. This is a daily supply zone, and so at present this is the area you should focus for your trade plans until this high liquidity demand zone is violated. See, every high liquidity zone gets some expiry period, one day. Until that time, you will enjoy the profits the zone is providing. Okay, now let's move on to the next time frame. First of all, if you want to plan in this daily zone, do we get RR? You may not get. That's why you should fine tune this zone, and inside you should plan the trade until you get a good RR next time when prices are entering. Same is the case here also. Okay, next time frame is 4 hours. So I am changing the time frame to 4 hours. Let me change. Okay, we are in the 4 hours time frame now. So do we have any zones at this 4 hours time frame? Meanwhile, here you see, do we have any zone here? Yes. We have a rally, 2 base candles and a rally. This is weekly EMA. At weekly EMA, we have a zone confluence. But this is an aggressive trade setup. Why aggressive trade setup? Because it is not having confluence with the daily zone in this area. But maybe a strong order flow might be there. Why? Go to the daily, you will understand. Have you noticed? A rally candle, another rally candle. I told you between 2 leg candles, you can draw a zone. The higher wick of this zone and lower wick of this zone you can draw. In that area, most of the times the order flows are very strong. Exactly the next time frame we are seeing a clear zone. I explained this new concept, one of our HLQ zone analysis videos. In case if you missed, please look into our important analysis and strategies playlist. One of the videos I have explained this concept. In that playlist, I added that. So rally, base, rally. You have 2 not rally, base, rally. Sorry for my mistake. You have 2 rally candles. The higher wick of this candle, lower wick of the candle. People draw the zones. That is another way of drawing supply-demand zone concept. But according to our supply-demand zone concept, if you go to further lower time frame within this area, you can find the zone. This is the daily time frame. These are the daily rally candles. Between these 2 rally candles, we are seeing a zone. And that zone you will see in our concept in 1 time frame lower or 2 time frames lower. So 1 time frame lower is 4 hours. So that's why in the 4 hours we have a clear structure here. Rally, 2 base candles and a rally candle. Of course, this is a medium size leg, part of the base. This concept I also explained. When a leg candle can be part of the base. This video also you can find in important strategies and analysis. Important analysis and strategies playlist. Look into that playlist. You know, at our homepage, NeoStock YouTube homepage, you can find the tab playlist. There all the playlists you can identify. So in important strategies and analysis playlist, when a leg candle can be part of the base with the title or with that thumbnail, you can find a video. So please go through that video. Okay, next time when prices are entering in this area, definitely this will give a good trade opportunity. But before that, this high liquidity demand zone is currently holding. It is not letting the prices go down. Until this zone is violated, you can't plan any trade here. So our focus should be on this area. Okay, now we are in the 4 hours time frame. In the 4 hours, is there any zone available here? We have a rally, base, rally is there, but this zone is already pierced here. Earlier it provided trade opportunity, rally, base, rally. If you would have drawn a zone here, see here, how nicely it has given. Prices entered into the zone and sharply, how much profit you would have got. This is a daily high liquidity zone, LOTL zone. After that, this zone is violated. Further came below, and here some order flows are there. Those order flows might have given you. Okay, how we can draw the zone? You can draw a zone like this, rally, base, rally here. This rally failed ERC candle. Suppose if you are convinced this is not a failed ERC, this is also a leg candle, then draw zone like this. Your risk will increase. That's it. But further you have to fine tune then to manage the risk. Now this is the drop, 2 base candles and rally. In case if you are not convinced this as a ERC, failed ERC candle. Because these are all at the edge. Sometimes Some people may feel this is okay, failed ERC. Some people say it is at the border. Maybe let me consider as a base candle. That kind of opinions, multiple opinions people may get. Because maybe this could be a smallest failed ERC candle. Or maybe this could be the largest base candle. Either way people will think, because the situation is at the border scenario, whether to really consider this as a base or whether it should be considered as a failed ERC. Some candles will be exactly at the border scenario. When you have the confusion, you have to take a decision based on your best experience. Okay, I am considering this is a failed ERC candle. I am convinced a base candle, rally candle. Within this area, we are getting multiple tests. From this area, again drop, base, rally is again created. Next time again you may get trade opportunities from this zone also. But anyway, this is the origin. What about supply zone within this? Here you have a balance is there, prices moved within. This is not really a convincing leg candle, but I told you, sometimes you can compromise and draw the zones. A legging is not very clear. But by considering this prices here in this area moved in a balanced way, so I am considering maybe this could be the base. For our supply zone and drop with small pro gap is also here, you are seeing, maybe very small. So that way, by considering these points, I compromised this as a leg-in, but definitely this is a base candle, no doubt in that, but compromised sometime by seeing the other candles price action. When you can compromise and draw the zones, that video also you can find in important strategies and analysis videos. In the daily HLQ analysis videos, every time I am explaining some new concepts, and important concepts I am keeping them in important strategies and analysis video. Everybody should go through all those videos to learn the new concepts, which are not part of your regular current training course, but these are the additional concepts. Everyday HLQ analysis videos, I will be seeing some different scenarios sometimes. At the time, those new concepts I am explaining. That's why it is important for everybody to attend that everyday HLQ analysis video to learn the new concepts. Even though you may feel like they are intraday related trading concepts, but the concepts are not intraday. The concepts can be applied in any time frame. So that's why listening the videos is important, even though you don't trade regularly on day wise. Maybe you could be a swing trader. Still you have to listen HLQ zone analysis videos to learn the new concepts. Those concepts you can apply for your swing trading also when the scenario occurs. Okay. Anyway, I am believing this is the area, the order flow will be there, institutional order flow, because the origin, the imbalance started from here, from this candle. Earlier, this is the area prices are in balanced way. That's why I compromised and drawn. This is a leg-in. These are the base candles. So this is a 4-hour chart. This is within this area, prices might be moving for some time because this is the daily zone and this is the daily supply zone and this is the daily demand zone and current trend is sideways. Now let's go to, now you get the RR, enough RR from this zone to this area. You get definitely more than 1:3 RR you get. If you have any concern, please look into the RR by using this long position tool. Approximately I am keeping some stop buffer approximately, but when you are planning your trade you can exactly do the calculations. Up to here I got 1:5 RR. In the coming days, in the coming weeks, you will also be learning the sideways trade setup also. Sideways trade setup at extreme levels. Now, the daily is the extreme level because that is the area we identified, and lower time frames we are planning the trade. Maybe it could be, the trend could be bearish or bullish, but when this higher time frame HTF is sideways, there are higher chances prices will be moving between these two levels. When prices reach these extreme levels, only you plan your sideways setup related trades. In between prices movements, any of the zones based on bullish or bearish trade setup only, you have to plan your trades based on the lower time frame level. Suppose if you are planning your trade at 1 hour entry, so 4 hours could be your trend. This is the area you have to plan your trend calculations. If this is also sideways, probably HTF you have to give importance because HTF higher time frame zone is also sideways. So HTM should be considered as extreme level for the sideways trend. In between, if you plan a trade, there are higher chances they might be violated. Okay, now 1 hour, because this is a 24 hours time frame, daily zones, daily candles. That's why I am limiting my analysis to 1 hour time frame. If anybody wants to plan 15 minutes, you can further, you can. Okay. In 1 hour, do we have any zone within this area? That is what we have to see. See here, 1 hour you have a rally, 3 base candles and a rally. If you want to draw week to week, you can plan like this. Demand zone. See, this is already tested first time, again second time. This is also a high liquidity zone. Let me change the color to dark color. Okay. See again, third time, fourth time, fifth time. Several times this zone is getting tested. Currently this is working as a inside daily high liquidity zone. We have 4 hour high liquidity zone. Inside 4 hour we have 1 hour high liquidity zone. Your stop loss should be at this line or with stop buffer a little below. This is the real institutional order flow. At 1 hour I am considering because all these candles are 24 hours trading sessions will be there. Okay, what about your target in this area? Here you have a fine-tuned zone. Exactly here it is there. The supply zone. This is the real 1 hour order flow, fine-tuned 1 hour order flow. So those who are planning for a short-term trading point of view, short-term, this is not for intraday point of view, short-term, this is the extreme levels are, this is the extreme level at the daily, inside the daily, this is the extreme level inside the daily zone, daily demand zone, this is daily supply zone. These are the fine-tuned levels. And this is the high liquidity at the daily area. Probably target could be this is the one. If you expect, or maybe you may book the profit at 1:3 RR level from here to here when prices are moving. You need not wait up to this area in case if you feel at present the trend is a downtrend, the short-term trend, not daily trend, short-term trend is a downtrend. If you feel like that, based on that, if you want to exit at 1:3 RR level, you may exit. That way also you can plan. But until this zone is violated, you can plan multiple trades. But you never know when it will be violated. You have to take a risk. Who knows? The next test it may be violated. That possibility is there. Why? Because every high liquidity zone will be having some expiry period. You never know when it is going to expire. If we would have done this analysis a little before, probably you would have taken this trade and enjoyed these profits. But who knows, next time it will test again, it will go up. That possibility is also there. But when it is testing more and more, it will be nearing to its expiry period. That is what we have to understand. But we never know when it is going to expire. Maybe we did the analysis a little late. Otherwise, we would have captured these opportunities. At least this opportunity you would have taken. If next time if it tested and further move, maybe that could be a great opportunity. So that's why it's all, see, high liquidity zone, always you have to accept the risk. If you identify high liquidity zone late, there are chances, higher chances the zone might be violated, but we never know. That will violate immediately after some time. But you have to accept the risk. If you are prepared to accept the risk, then only you should plan your trade. But definitely those who took trades from this zone earlier, they already would have enjoyed good profits from this zone. And moreover, this daily supply zone is having a daily EMA confluence at this point of time. Go to the daily time frame. So this daily zone is having EMA confluence. Probably it will give some trade opportunities. Okay, this is about our Bitcoin analysis until 1 hour. So we did this analysis based on the top-down analysis approach, starting from monthly until 1 hour we did this analysis. 1 hour, 4 hours, daily, weekly and monthly. These are the time frames we have analyzed. Hope this information will be useful to you for your further study and analysis to plan your trades. Let's all meet again in our next video. Thank you.